Geoffrey Dennis is with us. He's independent emerging markets commentator. He's joining in to take some questions on what he's seeing out there. Geoffrey, great to have you with us here. Thanks very much for your time as always. The PMI numbers is the latest data set that we've got, and generally it's all quite good. But in the US, and some are pointing to this, the services employment index within the PMI, that's fallen to the lowest since, COVID levels. Now that is a bit startling. If you have any thoughts around that, yields did come off a little bit, especially the front end yesterday. The 2-year, for example, from 5, it went down to about 4.9. Not very much on the longer end. The 10-year was stable. Just your thoughts to begin the chat, Geoffrey.
Well, it's a surprising number for sure, because obviously the service sector has been pretty strong and the economy overall has been very strong in the first quarter. But I do think that there are some signs, and this is just one of them, that the economy may be starting to slow down a little bit. There are some worrying numbers on, for example, consumer debt levels, which have risen quite sharply, and of course interest rates are elevated. So I think the maximum optimism we've had about the US economy in Q1, which has obviously been much, much stronger than anticipated, I think is probably should begin to come off in the second quarter. And this PMI generally, including, of course, the services number you mentioned, could be an early sign of that. And that is clearly, as you've implied here, supporting this better mood for equities at the moment globally.
All right. It's clearly a better mood for equities, right? I mean, we've had a dream run, especially in a market like India, Jeff, a market that you track very closely. At this point, how do you feel about India? Because we are heading into elections now. It's been a very strong run so far. Do you think the momentum can keep going? Or at some point, are you expecting consolidation?
No, I think there'll always be consolidations, but I would always buy, with respect to India, I would always buy a sell-off at this point in time, buy a consolidation, because frankly, I think the global narrative, which is going to be always important for every emerging market, and for emerging markets overall, is not really much change. All I think has happened is we've pushed these rate cuts that people have been expecting from the Federal Reserve out into the future. Now, I began the year thinking there'd be 3 rate cuts. I didn't think there'd be 6 or 7, like some people thought. My call is now 2 rate cuts, which is the first one in July, well before the election, and the second one in December, just after the election. I think there's 3 inflation numbers before then, and of course a whole host of employment of real economy data, to look at before we get there. So I think it's entirely possible the Fed will be able to go to rate cutting in July. Now, if that is the case, what that is going to do is bring the dollar down, and it's already beginning to drift a little lower. It's going to bring bond yields down. We saw a hint of that, of course, over the last couple of days. And that is going to take pressure off emerging markets. Generally, I think EM will rally, and it's rallying already. Very strong day for EM today. Now, what does that mean for India? I think it takes some pressure off the rupee, as you've just mentioned. I think ultimately, with inflation in India having come down a little bit and rates being elevated 6.5%, there may be scope for interest rates eventually to be cut. And this remains the number one growth story across the emerging markets. People prefer the market to China. And I think it's widely expected, as I think you will agree in the studio, that the BJP will win the election. And I think that'll be positive for the market. So I am bullish about India, but, we will have pullbacks. And I think we're obviously still at the mercy of the Federal Reserve. But assuming that narrative of mine plays out with rate cuts in the second half of the year, I think you've got to buy any decent sell-off that you have. And I think we'll go higher over the rest of the year.
All right. Hi, Jeff. Good morning and good to see you. I wanted to ask you about this point. For the start of 2024, you're seeing that the US markets actually have been off the blocks in style. They've actually done better. Developed markets have done better than emerging markets. Do you think from now on, given that you have an impending US election, which could be quite competitive, you would rather put money to emerging markets? And from that back, India still stands out, going by what you just said?
India certainly stands out within EM. I think the call of EM versus DM is actually complicated, because if you look at the as you rightly say, year to date, developed markets have outperformed emerging. It's been a very odd year because in the rising market phase, which was essentially the first 3 months of the year, developed markets outperformed EM, which is unusual. Normally, it's the other way around. When markets rise, EM tends to outperform. And in the sell-off that we've had since around the end of March, emerging markets have actually outperformed. And I put this in my note that I posted today, which is unusual in a sell-off. So the whole thing is sort of muddled up. And one reason for that is China continued to be a drag on EM earlier in the year. And and it's still huge, of course, over 25% of the index. And in April itself, it's been less of a drag on EM than is typically the case, has typically been the case recently. And that's supported the overall index. Meanwhile, India's ridden through a lot of this, albeit obviously with some selling pressure. My bet would be that if my narrative plays out, which is that some, as I say, some modest cuts in interest rates, pull back in the dollar, lower bond yields, people looking towards the emerging markets, given the relative valuation gaps between EM overall and the developed markets, especially the US, I think EM will outperform. But I'd rather focus on the call that I think from here, EM, which is moving back into positive territory for the year today, having been in negative territory for a few days, I think will do well over the rest of the year. My call remains a 10% increase for EM for the full year in dollar adjusted terms. And I think India, which is up nearly 7% before today, year to date, will continue to outperform.
All right, EMs will continue to outperform. I guess that's what our viewers would like to hear. Thanks a lot, Jeff, for joining in and giving us your thoughts here on CNBC TV18. But plenty of stocks in focus. So when we come back, we'll drill it down to the specifics. Keep it with the channel. We'll come back in a bit.